All right, what is up, everybody? Welcome to CRL Chart Request Live. It's a show where you provide the requests, we provide the charts. I'm Spencer Israel. That's Sam Gatlin. Sam's going to be our chart master of the day. Sam, are you ready? We got a few to get through.
Yeah, let's get to it, Spencer.
Okay, let's start with this request from Kareem. He's looking at silver, specifically the SLV. His time frame is 6 to 12 months. He's looking for a breakout level in the SLV, the silver ETF. Looks pretty good to me.
Yeah, Spencer, it looks fantastic. So the big breakout happened right here at around 28, 27 and a half to 28. It's $30 if you're using the futures. And then the secondary target, which is now the breakout level, is 32 on the SLV and 35 on the silver futures. So if SLV is above this pivot high from October, which comes in, let's look at the exact level. It's 3180. That's the exact level you want to see SLV close above, and that would trigger an entry for me. And then from there, I think you're targeting this prior cycle high from April 2011. That was over a decade ago. I think that's where this one's heading. So that is 48.35. So that's really the trade idea here, Spencer, and I think it could happen in the time frame they provided. You know, this has been coiling right here for a very long time. This isn't very helpful.
What were you just telling me about the short interest?
The short interest, yes. Also, the short interest in SLV is at its highest level ever. It's never had more short interest. And the last time the short interest was making a new all-time high was in September of 2022, when this SLV was bottoming out, carving out the head of a multi-year inverted head and shoulders.
And just to remind everyone, the reason you like, or the reason you're interested in an all-time high short interest is because to you, that indicates that more people, ironically in a way, more people betting against it is actually bullish.
Yes. Yeah, that's exactly right, Spencer. Yeah. It's kind of funny how that works, but absolutely, that is right. The positioning is offsides in this market.
When the short interest gets to be extreme, people get caught off sides and the seesaw tips the other way, right?
For sure. And those moves can be extremely powerful as they unwind those positions. Yep. Because,
the conditions are ripe for a squeeze. Doesn't mean it don't happen, but it is ripe for a squeeze.
For sure. These margin clerks, they don't care about what price they get. They just want to spray the market with these orders once they start to squeeze these traders out of their positions.
Yep. All right. I see the chat is asking about Alibaba. We won't get there yet, but I do have a similar stock for you from Nick in the inbox. Email your questions at stockmarketmedia.com. He's asking about Bilibili, Bili. This is just any other one of those Chinese internet names. Don't know what they do, don't care what they do, but Nick wants to know.
Yeah, so this is a $9 billion Chinese tech stock. So let's look at Bilibili relative to KWEB. This is the Chinese internet ETF. And you can see that in the prior cycle, it had a pretty significant period of outperformance. So from its IPO to the 2021 peak, it outperformed the benchmark internet fund by about 1,000%. So this one definitely has potential to outperform. Now, we are in the middle of a big sloppy range in absolute terms. So we're seeing stocks like Alibaba break above the shelf of former highs from October and 2023 and 2022. It's a very well-defined level of interest, and I think Bilibili is heading for that. So if you're a very short-term trader, I think you could buy this breakout above 20, let's call it 25. So 25 to 30 is one trade. But what I'm really interested in is trading this breakout of this massive base which I think could lead towards this prior cycle high around 150. That's really what I'm interested in. I'm not caring
What
about.
did you say? I'm sorry. Did I hear you correctly?
Yeah.
$150?
Yes. Yeah. I think this one's going to 150. Do you think I'm crazy, Spencer?
On Bilibili.
Yeah. Why not?
It's done it before, so it's not out of the realm of possibility. It can happen. It has happened. But it's a long ways away from there. So
it's a very long ways away from there, and this is more of someone with a time frame of quarters and not weeks or days. Did we get a time frame from Nick?
No, we did not. Did we get a time frame from Nick? No. But he did ask for a price target, so there it is, the prior all-time high. Of 150 or 157.
Yeah, no, I think if you want to be more short-term with it, you could use this 38.2 retracement. So that comes in around 65. I think that's the first target. From there, you're looking at 100. Ultimately, though, Spencer, I really do believe this one gets to that 150 level. And you also, I love how this VWAP from that prior cycle high comes in right at the breakout level. So that just adds to the significance of this level. You can have a lot of conviction on a breakout above there.
Last one from the inbox, and we'll get to the chat. Hanson is asking about YPF. It's an Argentinian oil and gas stock.
For sure.
Nothing about it other than what I just said.
No, this has been one of the best stocks in the market this cycle, Spencer. So from this summer of 2022 low to the peak earlier this year, this one rallied 1,500%. There's not a lot of energy stocks that have rallied like that in that time frame. You saw a lot of nice rallies off the 2020 low for U.S. oil and gas stocks, but this one's built differently. This one it's just a different animal. And let's see.
Part of this is the fact that it's rising, like rising tide lifts all ships. Argentina has been great. So it's not specific to these guys. It's just the Argentinian market has done really well.
For sure, Spencer. That's absolutely right. So I wouldn't be surprised if this one's heading down towards this 38.2 retracement. I think that could be an interesting entry. Depending on your time frame, if you're more short term, I think you could drop a WAP from this peak in January of this year. So if you're thinking about trading this one with a time frame of days to weeks, you could buy this one on strength above 38.5 with a target of this 47. So that could be a very nice trade. And this is what the Fibonacci retracement levels look like on that time frame. I think that could be very nice, depending on how you're wanting to trade this. But for me, I really want this one back above that 61.8 retracement level. From there, I think you're looking at a pretty nice trade towards that 70 level. I love this one.
So you like it above 44 is the reality.
Yeah, but that's just me, Spencer. Like, that's my time frame. And you can see that here's YPF relative to the XLE. This one's clearly taken on a new leadership role relative to the energy industry. So I think this is a very interesting stock.
I mean, if you're looking for international exposure, you could probably do a lot worse than these guys. Okay, let's go back to China. Chris K is in the chat. He's talking about taking profits in Baba at around 150. All you Alibaba bulls, you had a month to sort of sit on your hands and figure it out. But we're breaking out again today, Sam. We are knocking on the door of 150 in Alibaba. We're at 148 basically right now as we're doing this. So this thing just spent the last month doing nothing. And here we are now breaking out. So for all you people who are in with Straza earlier, 150. Thoughts on taking profits there, Sam?
For sure. This has been a huge winner. So from this low in January 2025 to the peak where it is today, it's up almost 100%, up 80% to be exact. But this one has been an absolute beast. And like we were talking about earlier with the Bilibili, we think this is just a primary trend reversal, and it's likely heading back towards this prior high from 2020. So I think Alibaba is heading towards this 320 level. Now, if you bought this breakout above 125, and you were just looking for a short-term trade, I think 150 to 160, I think this range could be short-term resistance, but I don't think it lasts very long. So if you have a longer time frame, I don't think it makes a lot of sense to sell there. I think this one's heading much higher, but nonetheless, that's just my time frame. So do what's best for you.
Breaking out again today here.
Yeah, absolute beast, Spencer.
Yeah, and absolutely, it had an amazing start to the year, then it kind of consolidated for like about basically a month, right? Digested all those gains, and
right.
Boom, here we are, we're up almost 5% today.
Right, so, and here it is relative to the FXI, the China ETF, the China large cap ETF, and you can see that this one, not only in absolute terms, but also in relative terms, is completing a pretty textbook bearish to bullish reversal pattern. So I love everything about Alibaba right now. I see no reason to sell it here, but again, if you're in some short-term calls like the breakout multiplier is, then it makes a lot of sense to sell here. But if you're just holding common stock and maybe it's in your retirement account, I think it makes a lot of sense to hold it for a longer period of time.
If you own this in your retirement account, God bless you. Okay, let's go to Raphael. He dropped a few tickers in there. We're only going to look at one or two of them. He dropped the Baltic Dry Ship, BDRY, IPI, and MTZ. MTZ is like the most normal of those charts. The IPI chart looks weird to me. Maybe that's just my scaling I have, and yeah, that's my scaling.
Yeah, your charts are pretty weird, Spencer.
Yeah, well, it's in this range. So let's look at the MTZ.
For sure. So this is MasTec. This is one of the largest engineering and construction stocks out there. This is about $10 billion. And you have a really clean setup here. I love this. So thank you for bringing this.
Wait, did we lose Sam? Tim. Oh no.
Sorry, am I back?
Okay, we're good.
Cool. Sorry about that. So yeah, this is one of the largest engineering and construction stocks, and you can see that from this late 2023 low to the 2025 peak, it almost tripled. So that is a huge move, and this is not a tech stock. Remember, this is an engineering and construction stock. So this one really has a lot of momentum behind it. However, it failed to hit the first Fibonacci extension level, so that is cause for concern. It fell about 5 points shy of our first target, so that speaks to some potential weakness in this trend. But nonetheless, the setup here is you're trading a base breakout with the neckline right at 125. And if it's above 125, I think this one's heading towards 175. And you also have this potential little bear trap. So if you get back above that 125 level, I think it could potentially squeeze them out and get a pretty fast move back up towards that 175 level.
And then the prior resistance would be your support on that, right? So.
Absolutely, Spencer. Yeah.
All right. Cool. What about Banco Santander for Wavy SAN? This thing has been in like an epic, 17-year downtrend, and then it just ripped this year. So
where's this one from, Spencer? Do you know?
I thought Mexico. Am I right?
Let's look. This one is headquartered in Spain. No, you got the Spanish heritage right, but not the country.
Okay, my bad.
No, good guess though, Spencer. So let's, yeah, okay. Hello. Anchored VWAPs are like voodoo, Spencer. I mean, these things are so good. So the VWAP from this all-time high, let's change it to this peak in 2008. So that comes in right around 6.25, and you can see the market kind of tried to acknowledge it, but not really. The market's making new 52-week highs today, trying to claim this high from 2018, early January 2018. This one peaked and rolled over and had a 75% drawdown. So I think that is going to be a big level. There are likely some bag holders there. So I'm expecting this one to respect the 7.25 level. But from there, if you get a breakout above 7.25, I think you're looking at the 161.8 retracement, or excuse me, the 161.8 extension of this base, which comes in around 10.75. So that could potentially be a 50% move in a matter of months. I think this one's shaping up quite nicely. And let's look at it relative to the XLF. You can see that it's not just the absolute trend that's screaming higher. It's also working in relative terms. So this one is a leader in financials. And this is coming after a prolonged downtrend too. So this is a massive trend change. And, you know, this one could have legs. This could be the beginning of a potentially multi-decade trend.
Dude, you gotta chill with the chill with like the Billies to 125 and the multi-decade trend changes. Right?
Well, it just depends on your time frame, Spencer. You know, I'm not a day trader. I'm looking at big trends, and this is
not everything is a multi-decade, regime change, right?
That's kind of what we're seeing, though, Spencer. Right now, like we've seen Europe suck for so long relative to the United States, but we've just seen the biggest momentum thrusts of all time. So we've seen my entire life, Europe has underperformed the United States.
I know.
So that's decades, man. Spencer. So I think we could see that happen in reverse. You know, we could see Europe outperform for decades.
Since 2009, right?
That's a long time.
Yeah. Okay.
We could outperform until 2040, you know. Of course, that's not something that we can trade on, but I think that's how we should be thinking, big picture. And big picture, this SAN looks fantastic.
Okay, maybe. What about this for Mr. Zerby for this QFIN? This thing is just blasting off today with these other. Actually, no. I think they had earnings. I think that's what the deal was. They had earnings today, but they're up 10%. Is that an all-time high? That's an all-time high.
Yeah, a double beat, new all-time highs. And I think you could also call this one a little gap and go. You can see that we gapped above this shelf of former highs, 2 new all-time highs. And I think the first target, I already have this one fibbed out, is $67. So I think you could get about 50% upside in the QFIN here within a matter of months. This one's really working. Let's look at it relative to KWeb too. Let's see if it's breaking out. And you can see, wow, this one has been working for some time relative to KWeb. Wow, so since this 2020 trough to the peak in January 2025, this one's up almost 1,000% relative to KWeb. So if you're looking for some Chinese leadership, this one will get the job done.
There seems to be a lot of that going around.
Absolutely.
Let's do a couple more. Let's do HE. This is for Bill. This is Hawaiian Electric. The stock has languished ever since those wildfires a couple years ago. Was it last year? Or I think maybe last year or 2 years ago.
For sure.
Remember. And you can see the gaps all over this chart, right? But Bill is looking for it. I'm not sure what you're looking for, Bill, if you want to be more specific, but he asked about it. So
this is pretty gross, Spencer. I don't really want to talk about this. I don't think this is something Bill should touch.
gonna be slow anyway. It's a utility. Right?
Yeah,
So,
this looks like trouble. This looks like a real disaster.
finally, we found one Sam does not like. Okay, what about,
I don't like this at all.
What about AGI? We started the show talking about silver. Let's go to Alamos Gold here.
Yeah, speaking of decade-long trends, Spencer.
Yeah, those are all-time highs. So
AGI went public in October 2011 and shortly peaked.
Great timing.
Yeah, right at the end of the cycle. That's funny, Spencer. I'm glad you brought that up. So from after its post-IPO pump, it dumped about 90%. And it took a long time to repair that damage. You can see it just churned around in a big sideways mess. This was not anything you wanted to be involved in. But nonetheless, it has reclaimed that post-IPO pump, and it is now breaking out to new all-time highs. And 21.25 was the breakout level. We're now at 25.5, so we're well above that breakout level. But I think the next stop here is 33, and AGI relative to GDX is also a leader, but it's not above that high from 2013. So I think this one has some work to do in relative terms, but I like this one a lot.
All right, let's look at Vistra, VST. Vistra, this is also a utility, right?
This is an AI utility, so this is nothing like
right.
the Hawaiian Electric.
Okay. Yep.
And this is a leader in the AI utility space. This one's $43 billion. This one, as you can see, has been
That's gotta be one of the larger utilities. There can't be that many utilities up around the $50 billion market cap range.
For sure. No, there's not. I think NextEra is above 100 billion, but
that's 150.
Yeah, that's the Lone Ranger up there.
Yep.
There's not a lot that are that significant. But no, this one has been an absolute beast. If you bought this bottom in May 2021, you made 1,000% in about 4 years. So this one has a ton of momentum behind it. But as we know, parabolic uptrends do not tend to correct through time. They correct through price. And this one has had some very severe drawdowns. I think this was probably the deep sack drawdown. It was about 50% in just a few weeks. So you can see that this one really can move adversely. So I think this is something to be careful with. And I don't really like how it's shaped up here recently. Like, this kind of looks like a potential distribution pattern. And I think this trades along with the whole AI theme. So like, if, I don't know, let's look at SMH. SMH is coming off the lower bounds of a prolonged potential distribution pattern. So if this is kind of the poster child of the AI theme, and if that is resolving lower, I think Vistra is likely to follow. But nonetheless, it hasn't resolved lower yet. So I think this one's just in a range. I think you can use different range bound market trading principles. I think, for example, right here, when it hit this oversold reading, that was a fantastic buy signal. I think once this hits overbought, which I assume it will, I think it's heading towards this 170 level. It's just going to stay in this range, but I think that'll be a great place to potentially think about shorting it. And that's where my head's at.
If you overlay the SMH with the Vista, they do look very similar. They're pretty cool.
Yeah, Spencer. Yeah, it's all one trade, really. The AI theme.
For sure. I don't think we'll look at this small cap mining play a lot. I mean, kind of below our line. It's $1. It's $100 million company. So
yeah.
I think we'll probably.
We talk about real stocks around here.
Yeah. That's it. Okay, wait. Let me make sure there's nothing else in the inbox. I don't think there is. I think we got through them all, Sam.
Cool. I think people need to keep an eye on the small caps this week, Spencer. So the Russell 2000 is coming off of its longest streak ever for consecutive down weeks. The IWM has been down for 8 consecutive weeks. And you can see that last week it finished with a potential hammer candle, and you're getting some follow through to start this week. So I think small caps should be front and center.
Yeah, small caps are on. I have that on the top right of my screen. I have the Russell, and I keep it up there mostly for like sentimentality. But God, has it been so awful?
It's been terrible, man.
Yeah.
And it's pretty cool how it found resistance right at this November 2021 peak. I mean, right to the very penny, Spencer. And they tell me support and resistance aren't real.
November 21 peak. I'm looking at my chart. Oh, you mean at the highs?
Yeah.
Yeah. Okay. Yeah. Yeah. I mean,
that's pretty cool, Spencer.
It's a very large smile. So it's a very
it
large
is
cup. It's a very large
sure.
cup. Put that way. Okay.
Sure.
All right. Let's wrap. Oh, sorry, I didn't miss DG. My bad. Let's do DG, Dollar General. That was for who asked? Was that for Dan? Who asked about DG? That was for Chris. Chris asked about DG. All I know about DG is that every time I go into a Dollar General, I get very sad. They're very sad places to be. And the stock is no different.
For sure. So this one recently had a beat down streak of 9 consecutive quarters. So after 9 consecutive earnings reports, this one sold off, and it has recently reversed that trend. This one now has 2 consecutive positive earnings reactions. So I think this one could potentially reverse trend, and I think your target, of course, long term, this one is a disaster. So this is a very short term tactical trade. You know, this is not a pattern you want to be involved in from the long term. But if you are short term, I think you could trade against this VWAP from this earnings reaction from Q3 2024, which was the worst ever, and it collapsed 32%. And that seemed to be the capitulation that the bulls were looking for, because that was the last negative earnings reaction. And you can see the market has respected that anchored VWAP on numerous occasions. It's acted as resistance. And here we are potentially turning it into support. And from here, I think you could potentially get this one up towards this 124 level, filling this massive gap. I think it could take some time, potentially 3 to 6 months, but this one's definitely trending in the right direction after a very prolonged disaster.
That's probably the nicest thing you could say about it, but there's not much nice to say about it.
No, this one's been terrible for a long time. So, this is a very counter trend move. So,
I mean, it is a staple. It is like a quote unquote recession play, but it's just been such a disaster, and it's not unique to them. I mean, Dollar Tree has been just as bad, if not worse, right? So, these Dollar Tree and DG had diverged for a while. I forget who was the outperformer there. Let me look at my chart. One of them was crushing the other for a little bit there. But now
there's been some big trends, like from 2017 to 2020, Dollar General was the massive winner, and now in recent years we've seen Dollar Tree be the better stock. Now it's just in a range.
All right. Let's wrap it up there. CRL will be back on Thursday. Alfonso and Patrick will be on the show. Email your requests in. We do the email inbox first. So questions@stockmarketmedia.com. Thank you, Sam. And good hunting, everyone.
Later, everybody.